A successful FP&A process, the outcomes, which is better clarity into the future, what happened, what didn't happen, it requires dialogue with the management team. To execute on a successful FP&A process, par for the course is the management team, the founder, you need to show up. Because unlike accounting, where accounting can probably solve 80-90% of the uncertainty on a monthly basis without the need of the management team's input, the FP&A is different. A successful FP&A process, the outcomes, which is better clarity into the future, what happened, what didn't happen, it requires dialogue with the management team. So I'm going to start there. But the other two pieces that are important is leveraging technology and finding the right people. I'm going to start with people because that is one of the most important pieces here. I've seen many companies trying to make their accounting staff execute on planning and planning strategy and financial models. And it's uncomfortable. Financial analysts inherently will be a little more analytical and deal with ambiguity, because in the world of accounting, the balance sheet balances, the debits equals the credits. In the world of corporate finance, financial analysis, planning, strategic planning, things don't always balance. They're not meant to always be accurate. Directionally accurate, yes. And if you're gonna think about speed and momentum, hopefully the answer is yes, accurate. It's never gonna be exact. And the types of conversations you wanna have with your planning team are sort of like those in front of a whiteboard. You wanna be able to think freely, release yourself from the constraints of your own imagination at times. The other piece to this is the technology. There's a lot of FP&A technology out there. We use primarily 3 platforms. And the reason we use these 3 platforms is they're more tailored to our specific customer needs, our customer persona, the size. We prefer not to use spreadsheets. If we're forced to use spreadsheets, because at times the founding team, the board of directors even, they want to be able to get into the model. And learning some of these technology platforms, these folks tend not to have the muscle memory as our analysts do. When we're asked to stay in a spreadsheet to provide our service, we're looking at platforms like GACON. It's a great tool. Now, why do you need this tool? When you build a financial model, say somewhere between December 1st and January 1st of the prior year for the current year's AOP, your chart of accounts may look different. The organization of the data may change. I've done it halfway through the year. I'll say, as a matter of fact, that expense, it was a big expense in February, for a conference. I said, I'd rather take that expense and book it in another chart of account where I feel like it makes more sense. And companies in technology like GACON, they help actualize all of that data and refresh it, even if you move stuff around. The other big piece is at times we don't control what the accounting team does. Many times there's a customer that doesn't have a CFO, but they have the accounting staff and they have the FP&A staff, but they don't talk to each other. They could be from different companies or they're partly in-house. And so the chart of accounts may sometimes change. And it may not be by much. It could just be, hey, I decided to add an additional chart of account. And there's already 50 or 60 chart of accounts there. So finding that one is like finding a needle in a haystack, because like I said, one of the secrets to success in FP&A is the process and the cadence, which means you got to stick to the ops call, the finance call. What do the analysts bring to the table? They have to be ready because there's going to be information that comes out of those meetings that feeds another meeting. And the last thing you want is your talented people to be spending their time and spinning their wheels trying to update the chart of accounts. So I'm a believer. Anytime you can bring a piece of technology, even if it's just for reporting purposes, because you're trying to manipulate some numbers, you're trying to transform numbers, you're trying to analyze your numbers, and you want to stick to a spreadsheet, use a tool like GA. The next tools, which we're big fans of, is Clockwork and Jirav. We've been big users of both for many years, And the reason why we use those platforms, just like accounting staff uses Xero or NetSuite or QuickBooks, is because you can actually navigate these platforms and you don't lose control of your models and the versions like you can in an Excel or a Google Sheet. They're great for building out the underlying drivers that predict the future revenue or expenses. For reporting purposes, it connects seamlessly to any of the general ledgers that are out there. So you're not having to spend time importing those numbers. And in many cases, these platforms even connect to your workforce management platforms or payroll companies like Gusto, which is pretty sweet because, again, if you're in a service-based business or even in a startup world, 80%, 90% of your expenses are your people. If you can bring in the actual underlying people information by individual, by department, with salaries and benefits, and then in these platforms, you can do workforce planning. So you're no longer like building these hidden factories and spreadsheets to extract those numbers into your model. And it keeps everything robust and actualized, and never mind for analytics. Many of these two platforms even provide analytics right out of the box. Analytics for boards, for management teams, reporting, for founders, for investors. So if you enjoyed this video, please feel free to subscribe, and don't forget, we have plenty of YouTube videos around financial planning and analysis. Take a look.